Welcome to today's accounting lesson. Our focus is on two of the most important subsidiary journals in accounting, the Cash Receipts Journal and the Cash Payments Journal. These journals are not complicated. They help us see exactly where money is coming from and exactly where money is going. Without them, a business would be like a ship without a compass, moving but with no direction. In this lesson, we are going to break things down slowly. We'll start with the basics, then add more details step by step. We will use a school tuck shop as our main example. By the end, you'll be able to explain the difference between the Cash Receipts Journal and the Cash Payments Journal, identify the correct journal for any transaction, and even walk through examples line by line. Every business must record the movement of money. Imagine if the tuck shop sold chips, sweets, and cold drinks all week, but the person running it never wrote anything down. At the end of the week, how would they know if they made a profit? How would they know if money had gone missing? That is why businesses use cash journals. You can think of them as a diary, but instead of recording feelings and memories, they record money. The Cash Receipts Journal, or CRJ, records all money that comes into the business. The Cash Payments Journal, or CPJ, records all the money going out of the business. The first journal that we are going to look at is the Cash Receipts Journal. This is where we write down all the money that comes into the business. Let's go back to our tuck shop. Imagine it's break time. Learners line up, buy packets of chips, and pay in cash. All that money is received by the tuck shop and it belongs in our Cash Receipts Journal. Other examples of transactions that belongs in our Cash Receipts Journal is, for example, when a debtor pays what they owe. For instance, if a teacher bought on credit last week and now comes back and pays the 200 Rand that they owe the tuck shop, we will record that in our Cash Receipts Journal. Or if a loan is received, the school lends 1,000 Rand to the tuck shop and through an electronic funds transfer the money into the bank account of the tuck shop. That money was received by the tuck shop and will be recorded in the Cash Receipts Journal. However, later, when the tuck shop repays the loan, that will go in a different journal. Another example is when the owner contributes capital. Let's say, for example, the owner does an electronic transfer of 500 Rand to the tuck shop. That will also go into the Cash Receipts Journal. Remember, if money enters the business, we record that in the Cash Receipts Journal. So any money that will increase the balance of our bank account will go into the Cash Receipts Journal. You can think of the Cash Receipts Journal as a one-way door. It only allows money that enters the business. Now, let's move to the other side, the Cash Payments Journal. The Cash Payments Journal is where we record all the money that leaves the business. So any money that we pay out of our bank account. Examples from the tuck shop would include paying a supplier for inventory. For example, if we pay 800 Rand to ABC suppliers for chips and cool drinks. paying rent if the school charges 300 Rand to use one of their buildings. That will go into our cash payments journal. Paying wages if someone is hired to help sell during lunch break. Their wages will also go into the cash payments journal. Drawings. If the owner withdraws 200 Rand for personal use, that will also be a cash payments journal entry. So, the cash payments journal is the opposite of the cash receipts journal. The cash receipts journal records all the money coming in, and the cash payments journal records all the money going out. Think of the cash payments journal as a door that only allows money to leave the business. Last time we had a quick look at source documents. Let's quickly recap. Every transaction needs proof, and we call that a source document. Examples for our cash receipts journal will be receipts that is issued by the business when a customer pays, or a bank deposit slip when money is deposited into the bank account. For the cash payments journal, examples will include a cash slip when you pay at a till of your supplier and they give you a cash slip, or an internet banking notice of payment when money is paid electronically through an electronic funds transfer. Think of source documents as evidence. Imagine being in court. You can't just claim something happened. You need proof. In business, that proof comes from a source document. So, for example, at the tuck shop, Sipho buys a packet of chips for 10 Rand. He pays cash. The tuck shop issues a receipt. That receipt is the proof that the transaction took place, and then that receipt is used to record the transaction in the cash receipts journal. Another example would be if the tuck shop pays 800 Rand to ABC suppliers with an electronic funds transfer. The bank gives an electronic proof of payment named the Internet Banking Notice of Payment, and that source document will then be used to record the transaction in our cash payments journal. Before we can start recording our transactions in the cash receipts journal, let's have a look at the column headings of the cash receipts journal. Each column has its own purpose. The document number links to the source document, namely the receipt or deposit slip. The date tells us when the money came in. The details show who paid or why the money was received. The folio number is used to, for example, record the account number of the individual debtor who made the deposit. The analysis of receipts column is used when multiple cash transactions was made in one day and only the sum total is deposited into the bank. We then record each individual amount in the analysis of receipts column and the total in the bank column. The bank column shows the total amount received. We have a sales column or fees earned column, and finally we use sundry accounts for transactions that does not take place frequently. For example, interest received on our bank account. These headings keep our work neat and help us quickly see where money came from. Last time I gave you some homework to go and have a look at source documents and the information that is recorded on each document. Were you able to see how those documents and the information on it links back to the information you require to record a transaction in your subsidiary journals. Here is an example of a receipt, which is a cash receipts journal source document. Notice it has a date, the amount, and a receipt number. These match with the cash receipts journal columns. The document number or the receipt number goes into our document number column. The date goes under the date column. And since this was a cash sale, we will record the amount in the analysis of receipt column. And if it was the only cash sale for the day, we will also record it in our bank column. This shows how the source document provides the information we need for the journal. So let's see if we can record this in our subsidiary journal. If we now look at our cash receipts journal column headings, the first information we will need from our source document is the document number. On the top of our receipt is the school name, Sunny High School Tuck Shop. Then we have the address of the school. Directly under the address we see receipt number 1023. So that is the first information we are going to need. So let's go back to our cash receipts journal and record our document number. In our first column, the document number column, we need to write down our receipt number. We will use a prefix R to indicate that this was a receipt. So therefore, we will record R1023. The document number provides us with a way to go back to the source document that supports the entry should we later want to verify that the transaction was recorded accurately. Our next column heading is the day. We now need to go back to our source document in search of our date. Directly under the receipt number, we see that the date is recorded, and the date is given as 5 September 2025. So now let's go back to our cash receipts journal and record our date. If you look at the name of the journal, it is recorded as Cash Receipts Journal September 2025. So our month is already in the title of the journal. In our date column or day column, we will only record the day. So we will write down 5 because the transaction took place on the 5th of September. Our next column that we need to complete is the details column. So let's go back and see if that is recorded on our receipt. We mentioned earlier that in the details column, we either need to record who our customer was, so who we received the money from, or what it was for. So if we read through this receipt, we only have the name of our high school tuck shop on it, no customer. But almost at the bottom, it says payment method cash. So this was a cash sale. Since we do not know who our customer was, we will record that this was a cash sale. So let's go back to our cash receipts journal. In our details column, we will now record the wording cash sales to indicate what the transaction was for, since we did not have the customer name. If we had the customer name, we would have recorded that in our details column. Our next column heading is folio. We are now going to leave that blank for now. This column is only used at a later stage when we post our cash journals to our general ledger. So, our next column is the analysis of receipts column, and for that we will need our amount of the sale that took place that was recorded on our receipt. So let's go back to our receipt for the information we need. On our receipt, we see line items for chips, a chocolate bar, Coke, and lollipops. Those are the items that the tuck shop sold. We see a subtotal of 62 Rand, a line item for value-added tax at 15%, 9 Rand 30, and the total due of 71 Rand and 30 cents. Now our customer paid the total due, the 71 Rand 30 cents. Therefore, in our analysis of receipts column, we need to go and record the 71 Rand and 30 cents. In our analysis of receipts column, we will record 71 Rand and 30 cents. Our next column heading is bank. We're going to leave that open for now, since we do not yet know if this transaction will be the only cash we receive for the day. So let's move on to our sales column. So we need to go back to our receipt and find the amount that we need to record in our sales column. When a business is registered for value-added tax, they need to add 15% to the sales they make. Therefore, Sunny High School made sales of 62 Rand and then added value-added tax of 15%, which were then charged to the customer. The customer paid the sales to Sunny High School and the value-added tax. So the customer paid us 71 Rand 30, but the value-added tax is owed to the government. Therefore, Sunny High School sales is only 62 Rand. So we are going to use the subtotal to record our sales column in our cash receipts journal. Okay, so in our sales column, we will record 62 Rand. Our next column that we need to record is the value-added tax column. So let's quickly go back to our receipt and find our value-added tax. The value-added tax at 15% is recorded on our receipt as 9 Rand 30. So we can go back to our cash receipts journal and record 9 Rand 30 in our VAT column. And here you can see that we recorded the 9 Rand 30 in the value-added tax column. Our sundry accounts shows an amount, a folio and details. We're not going to use those since we had a column for sales and value-added tax. So, if Sunny High School made another cash sale for the day and issued receipt number 1024 for 115 Rand in total, 100 Rand sales, 15 Rand VAT, we will record it as follows in our cash receipts journal. The 1024 under the document number. The day will stay the 5th. It will once again be indicated as cash sales. Our analysis of receipts column will be 115 Rand, sales column 100 Rand, and the VAT column 15 Rand. If this was now our last cash sale for the day, and we are going to bank the money that we received for the day, we will add up the analysis of receipts column. And if we do that, we get an amount of 186 Rand and 30 cents. That total will be written in our bank column as the total amount received for the day. And since we deposit that into our bank account, our bank column will now match what our bank statement will later show as the deposit for the day. The cash payments journal has very similar column headings as the cash receipts journal. The document number connects the cash slip, cash invoice or internet banking notice of payment to our document number column. The date tells us when the payment was made. The details shows who was paid or what it was for. The bank column shows the amount of money that was paid. We also have columns for frequent transactions, for example, inventory and trade payables control, also known as creditors. And finally, we use sundry accounts for transactions that does not take place frequently. This structure makes it easy to track expenses. This is a cash invoice, a source document for the cash payments journal. It shows the date of payment, the name of the person or company paid, the amount, and a reference number. Each of these links directly to the cash payments journal columns: the date, the details, the document number, and the bank column. Again, the source document is the proof and it feeds directly into our journal. So if we now look at these column headings, our first column heading is the document number. So let's go back to our invoice in search of the document number that we need to record firstly. So on the top of our cash invoice, we have the name of the supplier, Snack World Distributors. On the left-hand side, we have their address and their value-added tax registration number. On the right-hand side, it reads cash invoice, and directly under that, invoice number 3045. So that is the information we need for our document number column. Okay, so in our cash payments journal, in our first column, the document number column, we record 3045. Our next column is the day column. So let's go back to our cash invoice. Directly under our invoice number, we see date 5 September 2025. So that is the information we need for our day column. So let's go back to our cash payments journal. Just like with our cash receipts journal, the month name appears in the title of the journal. Cash payments journal, September 2025. So in our day column, we're only going to write the day number, which is the 5th. So we write 5 in our day column. Our next column that we need to record is our details column. We previously said that in our details column, we either record what it was for or the person who we paid. So in this example, we can see that our supplier's name is Snack World Distributors. We will therefore record their name in our details column. So let's quickly go do that. So in our details column, we write down the name of our supplier, Snack World Distributors. For now, we will leave our folio column blank, just like what we did with our cash receipts journal. So our next column that we need to record is our bank column, which means we need the total amount that we paid to Snack World. So let's quickly go find that. Just like with our receipt, we can see that there's line items of what we purchased. Then there's a subtotal. There's a line item for value-added tax at 15% and the total due. Now we paid Snack World Distributors the full amount, the total that is due. So we will record 405 Rand and 38 cents in our bank column. Okay, so in our bank column, 405 Rand and 38 cents. Our next column heading is inventory. Now, inventory is something that we purchased to sell. So that is exactly what we did from Snackworld Distributors. So we will have to go and search for the amount that we need to record in our inventory column. Okay, so on our invoice, we have the subtotal, the value added tax, and the total due. Now, with value added tax, we pay tax on our income. But if we purchase something that we are going to sell and that item has value added tax on it from the supplier side, then we can deduct that value added tax from our cost price, because that value added tax we will claim back from the South African Revenue Services. So we are only going to pay the government the difference between the value added tax we charge on our sales and the value added tax that we can claim back on our purchases. So our inventory will only cost us what is recorded on the invoice as the subtotal. So let's go and do that. The subtotal is 352 Rand and 50 cents. So in our inventory column, we record 352 Rand and 50 cents. Now, we are not paying a creditor, so we don't have to record anything in our trade payables control column. But we had value added tax on this transaction that we can claim back from the South African Revenue Services. So the last thing we need to record in our cash payments journal is the amount for value added tax. So let's quickly go find that. The value added tax on our cash invoice is a total amount of 52 Rand and 88 cents. As mentioned already, that is the amount that we can claim back from the government on our purchases. The only reason why we can claim it back is because the tuck shop is registered as a VAT vendor. If the tuck shop weren't registered as a VAT vendor, then we would not have been able to claim the value added tax back, and then our inventory would have been recorded as 405 Rand and 38 cents. But since the tuck shop is registered as a VAT vendor, we can claim it back. So let's go and record our value added tax in the VAT column. So in our VAT column, we record 52 Rand and 88 cents. And that's it. We recorded the transaction in our cash payments journal. Let's quickly recap. The cash receipts journal records all money received, so the inflows. The cash payments journal records all the money paid out, therefore the outflows. And our source documents are the evidence that the transaction took place, and the information from the source documents are used to record the transactions in our subsidiary journals. The cash journals may look easy, but they are still important. They are the heartbeat of a business's finances. Whether you run a tuck shop or a family shop, or even manage your own allowance, the principle stays the same. Track every receipt and track every payment. Thank you for joining this lesson. Keep practicing, keep recording neatly, and keep growing in your accounting journey.